and welcome back. Today is really exciting day for me to see all of you live in person, and this time round over the Zoom. And you are here because of the Spiking Wisdom, the Greatest Stock Investors program. Now I want to welcome especially those of you who completed with me a road trip across Malaysia, starting from Johor Bahru to Kuala Lumpur to Kota Kinabalu to Kuching, and finally we ended off at Penang, as well as welcoming back some of our students who join us again to catch up on the latest learning. I want to welcome all of you, and before we get started, it's very important we pay our greetings to one another. I want to show you a very unique way of paying greetings to one another, and the way to go about doing that is this, all right? 3, 2, 1, we're going to say hello to one another. 3, 2, 1, say hello! Wave your hands! Welcome back! Wow, awesome! That's the way! Welcome back! And thank you very much, those of you waving your hands. Some of you sitting there across and not knowing what to do, you didn't wave your hands, I can see you, all right? Now, one of the most important features of our program is that you need to keep your video camera on throughout the 2 days. Any point in time, if you are kind of off your camera and we couldn't see you, our angels will move you to the waiting room, all right? So this is to ensure that you're really participating with me, and I'll be firing off quite a number of questions to you throughout the 2 days. So make sure you have your camera on. If not, our angels will move you to the waiting room. Now, another important feature of our program is this. Ask and your questions will be answered. And the quality of each of the program itself depends on the quality of questions being asked. So I want to encourage all of you at different time intervals. I'm going to give you the time and space to ask me questions. And do not be shy about it, because the question you have on your mind is probably the same question on many other fellow students' minds, all right? So if I go in to tackle your question, I'm literally solving the question that is on most of your mind. How many of you are with me? Wave your hands so far. All right, okay, that's good. And everyone is engaging together. And just be careful, those of you who are driving, make sure you are really focused on your driving. And of course, I want to appreciate you making the effort to show up for the class on time. Now, before we get started, the first place that we really need to go is to Twitter. Now, this is our Twitter account, and if you are still not logged onto our Twitter right now, very simple. Just take your mobile phone. I want you to do this, all right? Just take out your mobile phone, and you should have a Twitter app on your mobile phone, not on your desktop, but on your mobile phone, all right? Take out your mobile phone, and you turn on the camera to scan on the extreme left QR code. Now, once you scan on the extreme left QR code, it will open up your Twitter app. Now, this is the way that you're going to communicate with me, and we're going to do our Q&A across the Twitter platform. And I really need all of you to be acquainted with this tool, because this is today the default, the fastest tool on the planet for us to get engaged with each other, all right? Now, also, right in the center, there's another QR code. You can take your camera, scan at it. It will open up for you to join the Spiking Global Community. This is where I send daily updates. You will receive via your WhatsApp, all right? So this is another powerful feature that we have. And on the extreme right, you have a red color background QR code. This is where you get help from our team of angels. Any logistics, or you need to excuse yourself to go to the restroom, please let our angels know, because if you disappear off the camera again, you'll be moved to the waiting room, all right? So make sure you have these 3 QR codes with you, and you are accessing them using your mobile phone, not on your desktop, but on your mobile phone, all right? So I'm going to switch back right now. The first place that we're going to go together, and I want to make sure you are really following through with me, go to the Twitter. And on the Twitter, you arrive at my account right here, right? And what I'm going to do right now is very simple. I'm going to go right across here and kind of welcome everybody. I'm going to create a new tweet, and you can see it's really, really easy and very fast for me. So I will send off a real tweet. This is real time, live, and I click on tweet. Ding! And once I fire it off, the way you find my tweet is this place right here, right? First, you must arrive at my account on your mobile device. If you can't find it, means you look for my name, Clemen Chiang. And then the way to place Twitter is found right here. This part here. All right? Usually you go to the first one on the left called tweets. And of course, the first one is what I call a pinned tweet. Don't worry about it. Just go down. The next one is the one I just fired out. All right? This is the tweet that I just fired out. And what you do is just click on the space somewhere around there. Just click on the space somewhere around there, and then it will show up like this, all right? So I want to make sure you are really comfortable using this tool. So I'm going to give you 1 minute right across here to tweet your reply. You can say, hello teacher, hello fellow classmates. You can just type something in there and make sure you understand how Twitter works, all right? So you're going to have 1 minute to do this exercise. Can all of you please do it right now? Please do it right now, and I'm going to play you the next music. Here we go. Shout, shout, let it all out. These are the things I can do without. Come on, I'm talking to you, so come on. Shout, shout, let it all out. These are the things I can do without. Come on. Okay, that's a bit rowdy music. Wrong choice of music. But welcome back. Make sure you guys are really comfortable firing off your tweets right here, right? And you can see live on your screen, on your desktop computer, or on your Twitter. If you're on Twitter, you should be looking on your mobile device, all right? So I'm like looking on my mobile device, who's firing off the tweets, and I can see very clearly on my mobile device those who are taking part in it. Now I'm going to show you on the desktop as well. It's much bigger view right here. And welcome back, David. Good to see you. And we have Jerisha. Welcome back. Good to see you. Joyly Tree. Wow, all of you got different names right here. Clarice, good to see you. Welcome back. And I hope your hubby is in the class as well. Beatrice, good to see you. Mel, Isaac, good to see all of you. And, you know, after I read your tweet, I will kind of click on the love button to acknowledge that I've read your tweet, all right? Welcome back, Mark Daniel. Good to see you. And Frank, good to see you. Phillips, Ashley, and you guys are getting a hang of it. Very good. And good to see you. Chong, good to see you. Moma, Lina, Chun Sing, Edwin, Rashid, good to see all of you. And Edmund Wong, good to see you. And any more? Kelvin, good to see you. And Jonathan, James Pang, all right? So this is how Twitter works. And every time I do a refresh, I'm going to get the latest latest tweet coming in from you, right? This is real time. That's why Twitter is so powerful, all right? So we've done this step already, and I want to make sure you're very comfortable using Twitter. For those of you who are still downloading the Twitter app on your mobile phone, very quickly go and get it done. Throughout the 2 days class, we'll do our Q&A on the Twitter app itself, all right? It's live, real time, and then it's very, very fast. Now, next thing I'm going to bring on board is the theme of what we're going to teach you over the next 2 days. Here we go. Spiking Wisdom, the Greatest Stock Investors Program, all right? Now, what you observe is that I will be found on the bottom right-hand corner right there. I'm still looking at you, all right? Now, in fact, all of you are in front of me on my big TV screen. I can see you live. And the moment, like some of you, like start to squint your eyes, start to, feeling like headache, means I know you don't understand what I'm talking about, and I'll slow down. Don't worry about it. Because really, what is important about learning how to trade and invest boils down to really just 6 questions. Now, I want to make this course so simple that if you can answer the 6 questions, you have understood everything about investing and trading. How many of you like it that way? Wave your hands, all right? So we're really just going to tackle 6 key questions, and the 6 key questions bring you to the highest level of thinking. Now, this is like over the last 23 years, I distilled everything I learned to kind of make it so simple, anyone and everyone can really get started learning how to trade and invest in the market, all right? So let me switch back right now, and you have all the time to write down notes, and you should have your diary with you. This is one of the most important aspects of it. I always have my electronic diary with me. You might have yours in a pen and paper. It's perfectly fine, but just make sure you are writing it down, all right? And here we go. What exactly is spiking wisdom? There are 6 questions that every trader or investor must ask. This is always the starting point, all right? So you want to start writing down on your diary, on your notebook, the 6 key questions. And really, this is the highest level of thinking, because if we can resolve the 6 questions themselves, we will have resolved many of the conflicts that we have in our mind involving money, involving wealth, involving finances. All right? And here we go. The first question is Spiking Wisdom Hacks 1. How to make 5 to 100% profit in one day. We start off with the how first. All right? Now the how is, we're going to see the many hows in the marketplace. And in fact, over the past week itself, this week itself is kind of like thunder, lightning, and rain. Things are happening so far, starting from last Friday. And today, Thursday, we are coming to exactly 1 week. So many things have happened in the marketplace, all right? But whenever we talk about how, we want to know one very simple question. And the question is this. Here we go. I go to the software right now, and you should be very familiar coming to the software. This is where you go to spiking.com/wealth. Now you can do that on your desktop, and this is how we organize our activities. Really simple. This is spiking.com/wealth. And once you go to this website, you go to the top left-hand corner, and you click on our logo. That's our beautiful logo right there. Click on Spiking. You will arrive exactly on this page. All right? So that's exactly what you need to do to come to this page. Now, once you arrive at this page, then the thing that will keep triggering in your mind is this. How the heck we got stock prices spiking up at this kind of rate every single day? Which really boils down to the first question that we need to ask: how to make 5 to 100% profit return in just one day? This is in front of you every day. It's not like once a week, once a month, once a quarter, once a blue moon. This is every day. All right? Now I'm going to show you another place where our engineers kind of work on the data. It's very, very exciting. This is where you can also go to another place right here. Go to the top left-hand corner. You see 3 horizontal lines. We call it the hamburger menu. Click on it. And then, as you scroll down, you see this place called Spiking Up. So our engineers love to keep developing new tools, adding on to the features on the left-hand side, so that you are always getting the latest data out of our platform that we have. And you click on Spiking Up. Right? I wait for you. Typically, once I start the process, I wait for you. You be acquainted and feel the speed. All right? Initially, you're going to take some time to try to navigate, but don't worry, when you work with a teacher like me, very soon, you'll be as fast as me, all right? So go and look for this guy called Spiking Up. Click on it. And you see this very important feature on the top right-hand corner. You have pre-market, post-market, and weekly movers. Again, this is to show you every day you have this kind of crazy movement per day basis. This is pre-market. Now I can also go here and click on the post-market. And once I click on the post-market, boom. This is getting crazier. Every day, 5 to 100% per day is real to you. This is 44%, this is 23%, 22%, 21%, 20%, 18%, 16%, 14%. Every single day. Or I can go and click on weekly movers. Click on it. And this is the movement in 1 week. 5 to 100% in 1 week. 75%, 53%, 36%, 12%, 11%, 11%, 8%, and so on. Now, what does that mean? Wow. Teacher, you start off the class fast and furious. Of course, it must be fast and furious so that you can feel that you have to catch up on speed with us. Don't take your own sweet time. All right? Learn how to navigate, move around very, very fast. And we go back to the first question. How to make 5 to 100% profit return in 1 day? So that when you look at the data, you realize that, holy moly, this is real. This is not for fun. If such an opportunity exists in the market every day, then jolly well, all of our resources should be channeled looking in this first question, the question of how. All right? So last chance, go and take a picture of this question, write it down, pen it down. This should be in your mind all the time, because such an opportunity exists every single day. And our job is to go and find such opportunities every single day. We don't waste time. We raise the bar really high. And later on, I'll kind of break down what I share with you about the wealth pyramid of becoming a millionaire. I'll share with you about the wealth trilogy. Those are the foundation. But tonight, I go in depth, really in depth, to tackle the key question. So, I've gone through this with you. We look at a stock like Chevron. And for Chevron, kind of in 1 day, we get in, bought low 420, sold high 760. And then the percentage profit return, 81%, did it in 1 day. Now, this is your whole game plan. All that we want to do every day is to play a game like this. We really go out there and find on a very conscious effort, all right? And if that is true, then only then you can have a chance to make big money in a short time. Deal with it first. Deal with the fact that you have the chance to make big money in a very short time. Because making big money over a long time, a lot of people can do it. when they stretch the time really long, 30 years, 40 years, 50 years, anybody can become rich over that kind of timeline. But to become rich in one day is very, very difficult, all right? So we're going to show you how to simplify the process. And before I push on, can you make some noise? So this is possible, and then we really push it. Okay, we are able to reconcile the first question. Yes, teacher, it's true. Every day there's 5 to 100% profit return out there for us to really go and chase. Then the second question is, who are making profits consistently? We're going to deal with the who right now. Because the who is exactly who we need to emulate, who we need to set up as the benchmark. This is really, really important, right? Because without this benchmark, the rest of the time, we are really wasting time. So I'm going to show you back to the software right now, and I'm going to give you lots of opportunities to go there and navigate. And the moment we say who, you must be very comfortable. Step 1, go and click on the hamburger menu on the top left-hand corner. Please do this on your desktop. Do not do it on your mobile app. You have to do this on your desktop, all right? So your mobile app is to watch Twitter, watch your brokerage account. Your desktop is to learn in the class, okay? Very good. So click on the hamburger menu on the top left, boom. And then you open up like this. So I want you to see very clearly, we always start looking from here, the dashboard, right? I'm going to teach you how to navigate. You can move from dashboard, and typically the latest products that we create will be shown right up here. Like we built, finished the race to 100, $1 million trades is a new product, Spiking Up is a new product, Trade GPT I'll be teaching you guys tonight. We are right now perfecting this beta version. There's still a little bit of bugs. I'm still not entirely happy with it, but we'll share with you later on. And then we have copy trade, we have stocks AI, we have options AI, we have cryptos AI, and then we have investors. This is the place I need you to go to right now. Go to click on investors, all right? And once you click on investors, it will drop down. And I'm teaching you technical language. Drop down means it'll open up like this, all right? So all these sub-branches, insiders, top 100, universal funds, sovereign wealth fund, they all fall under investors. So can I get you guys to click on top 100? Just click on top 100. You should start off with opening up the investors tab, and then you'll drop down and reveal top 100. This is an exercise. All of you need to do it now, all right? So make sure you're doing it right now together with me. Click on top 100. You should see exactly what I have in front of you. Please double check you're able to see this big panel on the top. Second, you're able to see top 100. And third, you can see our grandfather Warren Buffett right there. Please make sure you're seeing the same thing. And then I will play you the next music. You have 1 minute to arrive at this page. Please do that right now. Here we go. Oops. Let me just check on this. Here we go.
What's the trick? I wish I knew. I'm so done with thinking through all the things I could have been, and I know you wanted to. All it takes is that one look you do, and I run right back to you. You cross the line, and it's time to say F you. What's the point in saying that when you know how I'll react? You think you can just take it back, but shit just don't work like that. You're the drug that I'm addicted to, and I want you so bad. Guess I'm stuck with you, and When it all falls down, then whatever. When it don't work out for the better. If it just ain't right and it's time to say goodbye. When it all falls down, when it all falls down, all behind. All behind. You're the drug that I'm addicted to, and I want you so bad, but all behind.
Okay, welcome back. So how many of you are at the same page with me? Just wave your hands in front of the camera. I know you guys are there with me. Thank you very much. And make sure you are really following tight, because I really want to max out the time I spend with you, all right? So once you're here, you see the top 100. Now, we're going to do a very important exercise that was not taught live on stage. This is an exercise that I'm going to take you through together with me right now, all right? First thing first, you will always see the display of the data time. We want to make sure every time there's fresh data coming in, we'll reflect the time right here. Now, if there's no fresh data coming in, the previous data that came in was on 15 March, 8:54 p.m. Eastern Standard Time. That's how detailed, how dynamic the data is being refreshed, all right? Now, the next thing is, all the top 100 names over here, you need to know them. Right now, they become your immediate Facebook friends or your closest friends that you need to hang out with. Don't waste time on any other thing. You need to study every single one of the top 100 investors here. They become your closest friend to build your mindset and your psychology to become a millionaire. How many of you are really excited and you want to become a millionaire? Oh, wave your hands, all right? So this is the part that's really important. You must have a community to hang out with. And that's the reason why, I keep bringing up the point that you are the average of the 5% that you hang out with. 5 years, 10 years from now, who you become is who you hang out with today. And if your mind is clouded by small people, you will become small. But if your mind is flooded with people like that, you become big. It's a very simple mind game that you play. Now, do you really need to know Warren Buffett, shake his hand and high-five him? The answer is no, N-O, no. But you are studying him every day, you are having that conversation with him. That's why it's important. So I'm going to start off right here. I'm going to illustrate two very important examples. First example, you're going to see right here, we have Warren Buffett. And second example, we have Millennium Management, all right? Now, look within my square box. What is the difference between Warren Buffett and millennium trader known as Israel Englander? What is the main difference between Warren Buffett versus Israel Englander? Look very carefully, and I will fire off the question, all right? So you are looking on your own desktop. I'm asking you to compare between Warren Buffett and Millennium Management. Look within the red box, that's the clue, and I'll fire off the question right here. So, what is the difference between Warren Buffett versus Millennium? Millennium, make sure I got it. All right. And let me fire off the tweet. And those of you who are ready, you can go and reply to my tweet. I want to make sure you really understand what's going on. So make sure you take a look right here and fire off your answer, right? So I'm waiting for you right now. Go and do it right now. Go, 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 go. I wait for you, all right? Go and do it right now. Here we go. Oops. Here we go. All right. So you have 1 minute to answer this simple question. What is the difference between Warren Buffett versus the Millennium Trader?
Once upon a younger year, when all our shadows disappeared, the animals inside came out to play. Went face to face with all our fears, learned our lessons through the tears, made memories we knew would never fade. One day my father, he told me, son, don't let it slip away. He took me in his arms, I heard him say, when you get older, your wild heart will live for younger days. Think of me if ever you're afraid. He said one day you'll leave this world behind, so live a life you will remember. My father told me when I was just a child, these are the nights that never die. My father told me.
Okay, time's up, and let me take a look at your tweets. This is how we flow along with the class. And I come here, I do a refresh, and here we go. Who got the answer right here? We have Patrice. The numbers of millennials is 1,000 times more than the number of Warren Buffett in the 4th and 5th column. You got it right. Very good. The number of trades is by the thousands versus Warren Buffett less than 100. That is the little clue that you need to spot out, right? So Beatrice got it right. Who else got it right? Millennium has higher percentage of overall performance than activity than Warren Buffett, all right? So you are looking at performance and activity, but we are really looking at this big number, 1,000, right here. Look over here. This is like 1,825. This is like 3 and 8. Very, very small number. Look over here. This is how small it is. This is how big it is, all right? So I want to see the rest. Millennial higher percentage, good. Total portfolio value. Okay, so what Jolly Tree is talking about is the AUM. The AUM is represented as the asset under management. This is a very, very important theme or a key concept that portfolio managers measure against each other. We call the AUM, asset under management. Now, obviously, Warren Buffett is 310 billion. Millennium is only 86 billion. 49832, about 3 times. Warren Buffett is 3 times more than the Millennium. All right, so the quality of the portfolio value is big difference right here. All right, but I really want to know the big difference in terms of the trades. The trades are very, very important to us. All right, let's continue. And again, Clarice, Millennium plays thousands of trades versus Warren Buffett less than 10. That's correct. Number of below average cost is lower. I'm not really looking at that yet. Total overall performance and top activity, good. Invest less stocks for Warren Buffett. Number and figure. Millennium have higher percentage on overall performance. And portfolio value, total portfolio. Good. You guys are start looking at all these important words, all right? And I will use this opportunity to teach you all about the difference about all these keywords. You don't have to memorize them. Once I highlight to you, you'll remember more than anything you remember for the rest of your life, all right? So I appreciate the first round. Most of you got it right. And we come back to here. Now, this is super important, all right? You guys highlighted this one and this one. And I want you really to highlight on this one and this one. That's the big difference, all right? So, in terms of asset under management, big difference. In terms of activities, big difference. Question is this. How come Warren Buffett having a larger portfolio, he's not firing off so many trades? Whereas Millennium has a smaller portfolio of 86 billion, but he's firing off like 1,800 trades in one quarter. Why? Why the big contrast? Have you thought about it? Have you seen this for the first time in your life? That's why just on answering the 6th question, we can solve many, many conflicts in our mind. What is the key difference between these two? Who is the right guy or who is the wrong guy? What is the right or wrong answer? Maybe don't even have a wrong answer, right? So this is the part whereby you begin to realize that, holy moly, in order for someone to make consistent profits, there are many ways to go about achieving it. All of you wave your hands in front of the camera. Please make sure you understand this concept. In order to make money, there are different ways to achieving it. Now, Warren Buffett is like, every quarter, he's like doing less than 10 trades. Millennium, on the other hand, every quarter is firing off more than 1,000 trades. Big difference. But both of them got a common goal, to make money, all right? So this is the part you begin to realize that, oh, okay, there is no such thing as one true path to wealth or to riches. There are many, many ways. That's the reason why in the very beginning of your journey, you have to start off by learning all these 100 investors here. Now, I can tell you the big difference between them is this. Warren Buffett is a real human trader. Because the old man is very old, he cannot process too many things. He's only like firing less than 10 trades per quarter because he's really sitting there, press the trigger. It's called a manual trade. He probably call up the broker, okay, place the order for me. That's it. But Millennium, when you are trading like 1,000 trades per quarter, you are using a robot. It's no longer human beings involved. You're using machines. You're using algorithm. And that's why they can fire off many trades in a single quarter. All right? So this is the first introduction to the big investors. And we scroll down. Now we look at the next set of investors. We got Citadel. And then we got a mathematician, James Simmons. Right? Look at both of them again. And this time round, you realize that, their portfolio quite similar, around 80 billion. And the way they trade, the way they go about doing their trades is also quite similar. Thousands of trades per quarter, they are using machines. All right? So the challenge is, you and I, we are not going to fire off 1,000 trades per quarter. Humanly, it's not possible. We're going to play it safe by making sure we take the best trades among these 100 to formulate our strategy. Are you with me right now? Yes? Just wave your hands. That's the reason why I'm showing you all the different styles of trading by the very best on earth. These are really, really the very best on planet Earth when it comes to trading and investing, all right? So I go down, many other interesting names. Over time, I'll introduce you to them. But there's one guy that you really need to know is this guy called Carl Icahn. He's only doing like 2 trades at this moment. This guy is a rainmaker. The moment he goes in, he will kick the ass of the CEO. He'll put his people on the board of directors. He'll do everything it takes to win. He goes in to win, not to lose. So he got very few trades right now because he'll fire off everybody. The other guy is Baker Brothers. This guy is an expert in pharmaceutical stocks. Now, it's very easy to follow this guy because you can see that he's doing like less than 20 trades per quarter, right? It's like he only bought 12 new stocks last quarter. He's very relaxed because he's a sniper. Every pharmaceutical stock he goes into makes money. So it's very easy to learn from him, right? And I go down. There are many other interesting people like Katie Woods. This is one of the best traders in 2020. She was the top trader in the world, #1 hedge fund manager in the world. And that was because she bet really heavily into Tesla, all right? And her bet really pulled off, and she made so much money just betting on Tesla alone itself, all right? So this is where we answer the question, okay, who are making profits consistently? They are found all right there, but not done yet. Because why? The real data that we really want to go forward is found right up here. I scroll up to the top, and this is the one that we really got a full play. We got 8 categories of investors. What I just covered with you is top 100. There's Universe. We're going to click on it right now together. So let's click on Universe. And once the page loads up, you see how different it is right now. Just now was top 100. In terms of number of funds on Wall Street, 9,263 funds. That means every fund on Wall Street that's above 100 million in size, they are in our radar. And look at the top 4 of them. They are all trillion-dollar funds. 3.7 trillion, 3.2 trillion, 1.7 trillion. These are monster funds. Now, you need to follow these guys because the moment they move in big. They are buying like 5 billion, 10 billion, 40 billion of the single stock. That's why they are so powerful. So these are names that you must really memorize them and kind of keep it close to your heart. Vanguard, State Street, Vanguard, State Street, BlackRock, FMR. These are very big names. Barclays, Morgan Stanley, Bank of America, BlackRock Advisors, JP Morgan, Price Tiro, Wellington. And look at the amount. 476 is already bigger than Warren Buffett. So Warren Buffett is not the biggest of them all. There are funds much, much bigger than Warren Buffett, all right? Including the Sovereign Wealth Fund of Norway, Norges Bank, 419 billion asset under management. So as you can see, these are very, very big funds out there, so much money. That is the reason why I keep sharing with you guys. If you talk about making money, hey, stock market is the proven instrument. You never hear another instrument that has so many people playing at the same time. And then you can look at their trades as well, right? So let's continue. We have the next category called Sovereign Wealth Fund. And this is the fund of the nation. Right over here, we cover right now 24 sovereign wealth funds. Right up there. And the number one is Norway. 419 billion, so far ahead, all right? Second one is Saudi Arabia, 32 billion. Third one is Korea, 31 billion. And then you have Temasek and GIC, both from Singapore. You add up, it's about 15 times 2, 30 billion. So right now they are about 31 billion, somewhere close to the Korea Investment Corp, all right? So you can also see like Her Majesty passed away, but you know, they are still managing their funds. And then you have Kuwait, China Investment Corp, Abu Dhabi, Qatar. All these are very, very big funds. And then the bottom of it all is Khazanah at 23 million, all right? So again, this is another place I go to research what's the agenda of the country, how are they deploying their capital, and that's very, very important. Now, then we have the last part here, pension fund and retirement funds. You can take a look on your own. But we're going to cover right across to here, C-suite, CNBC, and the politicians, all right? Now, there's so many things to track. The question right now is, teacher, holy moly, just on the who alone, there's so many of the who. Which one are the ones that we're going to follow? How do we know who to follow? Right? How many of you have this question on your mind? Wave your hands. There's so many right now, right? Who to follow? So whenever we talk about a question, we always want to make sure you are given the chance to really think through, internalize, and then formulate your answers rather than, you know, I just dish out the answers to you. So I'm going to go back to Twitter right now. Here we go. Boom. Simple question. Who should we follow? Then. Who should we follow then? There's top 100, there's universe of funds, there's pension funds, retirement funds, sovereign wealth funds, there's corporate executives. Who should we follow then? Let me tweet it out and you have a chance to respond to this question. Here we go. You have 1 minute.
I don't know if you can see the bad things you do, and I'm losing every piece of respect for you. Yeah, you can make me laugh and cry just by being around. If heaven's door is open, it's 'cause you kicked it down. Every word you say, every smile you fake, I let you go. It's sad to see you feeding off the feeling. Every heart you break, every soul you shake, I let you go. It's you, not me, who messed up now when it's trouble in your birthdays. All the girls get weaker just by looking at you. Those big brown eyes always take over the room. Yeah, you can make
Okay, time's up. Let's take a look at the answers. Who should we follow then? From Leo, who put the most money that quarter will follow on the giants, standing on the giants or stand on the shoulders of giants. Luckiest girl, top 100. Joy 3, the most consistent. Now, the question is, how do you know who is the most consistent? You see, Katie Wood was the best fund manager in 2020, and then back in the year 2022, she was the worst performing fund manager. Within a change of 2 years, became number one, boom, dropped to bottom earth. How do you measure consistency, right? So these are the things I want you guys to start thinking about. Really, really interesting, fascinating question. So we have Dr. Yo, top 10 of the top 100. So she narrowed her range. You have Philip, top 100, top 100, top 100 and politicians, top 100. Now, all of you kind of getting very biased with the top 100, but I want you to know one very important thing that we know from the data, and that is this. The top 100, they don't work alone. All right? The hedge fund people, I mean, all these are hedge funds. If you want to call them, they are really known as hedge funds. Top 100, and so on. Now, the answer is, it's not just the top 100. The answer is a whole grouping of them moving into the same stock at the same time. Now, it could be a few of the top 100 entering the stock. It could be a few of the sovereign wealth fund, but for different stock, different combination. Sometimes they have the universe of funds and the sovereign wealth funds. Sometimes they have the pension funds and the retirement funds. Sometimes they have the top 100 and the insiders. Different combination. What really matters is the amount of inflow of money, all right? So all of you, please wave your hands and give me a thumbs up, means inflow of money. It really doesn't matter it came from who. What matters is large influx of money will cause the stock price to move. That is exactly what we are looking for, right? So very good attempt by all of you. Well done. And we tackle the question of who. Now, on the software side of things, all the tools are there. And you know, there are many ways to go about dissecting the tool. And one of the examples I want to give you to learn about the who is to show you the example of Warren Buffett and Apple itself. This, I think, is a great example. And if you can learn how to dissect using this, the rest is easy, all right? So follow closely me right now. So I'm on the top 100. Now, I could either click on Warren Buffett right here, or I go and search for his name up there. All right? So typically we search for his company name called Berkshire Hathaway. So I'm going to type on the top right there, Berkshire. And then the software will suggest to me, am I looking for a stock, which is a public company, or am I looking for insider? Now we are looking for the investor, means we are looking for the insiders. All right, so make sure you click on the right one, the bottom one. We want to know who are the ones buying. Click on Berkshire Hathaway. I wait for you right now. Please do that on your part. Make sure you are following closely with me. Do that right now. And click on Berkshire Hathaway. All right. So I wait for you. You have about 10 seconds to arrive at this page called the Berkshire Hathaway page. You see this name. And then you see the stocks over here. If you arrive at this page, means you are at the right page. All right, I wait for you. You have 10 seconds to get there right now. Please do it right now. Here we go. All right. And while you are doing that, let me switch over. And let me launch my Stream Deck. 1 second and I'll be here with you. Here we go. Default. Show progress overlay. Default standard. Sleep never. And okay, good. I think I set up already. So here we go. We are here on this page. And once we're on this page, we scroll down, all right? Make sure you are doing this together with me on your big laptop. And a few things to pick out will be here. Total 50 stocks. And the first row is Apple. Make sure you're seeing the same thing as I do. And I'm going to teach you how to reverse engineer this particular trade, just using the relationship of Warren Buffett working hand in hand with Tim Cook, the CEO of Apple. Together, they became the richest company on earth and the richest stock on earth. All right? So I'm going to click on Apple right here. See where my mouse is blinking? Ding, ding. Click on Apple. And you arrive here. Whenever you see rows and columns, this is the place where we reverse engineer. Very, very important how to reverse engineer. We always look at this column first. This is presented in descending order of the dates. Now for stock market, we always think about quarterly basis. Q1, Q2, Q3, Q4, right? So obviously down here, the dates, they are counting down, right? This is Q4. And then Q3, Q2, Q1, Q4, Q3, Q2, Q1. 2022, 2021, all right? So I'm going to start moving down. But before I move down, I want you to observe here. This is called the total shares owned. How many shares did Warren Buffett buy of Apple? All right? Now, obviously, he owns 895 million number of shares. This is like crazy, 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 all right? That's worth $126 billion. That's how rich old man is, all right? So I'm going to start scrolling down. You got to scroll down much more until you arrive in the year 2016. Look right there. Right? Now, what are we looking for? We are looking for this guy called bracket new. New means virgin, first time he bought the stock. So really, you know, we don't have to rush. Warren Buffett took his time. Only in 2016, he went in to support Tim Cook. He was not even supporting Steve Jobs. Back then, it was Tim Cook. Steve Jobs already gone, right? So he took his time, studied the company. He knows the business well. Then he started to go into show hand. Now, what do I mean by show hand? Watch over here. He started off with 9.8 million number of shares. The next quarter, he increased by 55%. The next quarter, he didn't do much. He leave it alone. Then the next quarter, he increased by 276%. Now, this percentage change is always comparing to the previous quarter. So you take 57.4 million versus 15.2 million, the difference is 276% more. All right? So he waited for 1 year. How do I know 1 year? Watch. This is 1 quarter, 2 quarters, 3 quarters, 4th quarter. 1 year later, he ramped it up. Right? Now, once he ramped it up, which is around 2016 Q4, he ramped it up, and then there was a bigger ramp up coming up. All right? Now, I'm going to compare these dates with BlackRock. All right? I'm going to show how they tag team together. So now, I will duplicate this tab on my browser, and then I'm going to look for BlackRock as an insider. So this is BlackRock. And the first stock on BlackRock is Apple as well. You guys can see, right? So I wait for you. Make sure you're seeing the same thing as I do. I'm on BlackRock right now. How do you know you're on the same correct page? You see 3.2 trillion. And you see the following stocks in the portfolio. And this is BlackRock Incorporated INC. You have 10 seconds. Time's up. All right. So I'm going to scroll down. Same steps that I done just now. And click on Apple. I want to know how BlackRock goes about investing in Apple. Again, I scroll all the way down. All the way down. And then I noticed something very interesting. You look at this column here called the total shares owned, and out of nowhere, BlackRock decided to increase by 2,596%. I want you to find this guy, Q1 2017. How he increased by 2,596%. All right? Make sure you are following me, but don't worry, you can always refer to the video recording. All right? But if you can catch up with me, that would be fantastic. Because what we are looking for is something like this. Big percentage change. This is called momentum. The previous quarter, he only owns 11.6 million. And then right now, he increased to 313 million, which represents 2,596% jump. Now, is this big or small? Give me a thumbs up. Is this big or small? This is very strange trade. Very big surprise for the market, all right? Now, what you want to take note of is Which quarter was that? 2017 Q1. All right? And then now I'm going to go back to Warren Buffett and see what happens in Q1 2017. Check this out. Q1 2017. Warren Buffett also went in to buy. 125% more. All right? That means after that, he stopped buying that much already. You see, after 129.4 million, the next quarter, only 130 million. This is a big jump. That cost him how much? Please watch very carefully right now. I'm going to perform magic. The magic is here. Look at the dollar value. That was 9.8 million. The previous quarter is only like 4.5 billion, 70 million, 500 million. This is very small change. This is close to 1 billion, very small change. And then out of nowhere, dun, 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 he decided to increase by 9.8 billion baht. And which quarter was that? Q1 2017. How coincidental that Warren Buffett and BlackRock bought at the same time? Show hand. Everybody please show hand. Oi! Show hand. And that is the beauty of studying data, and you can see, holy moly, how the heck they decided to conspire together, same quarter, show hand together, and from that point onwards, the stock price has never fallen down. Let me show you the stock price of Q1 2017. Here we go. AAPL, boom. 2017 Q1 is exactly right there. Right here. Q1 will be right there, this box. That was the quarter that BlackRock and Warren Buffett went in together. And you can draw a line across from that point onwards. The stock price has never fallen below it until today. Right? So keep your eyes there. I'm going to move the stock chart. You see, as keep going up. 2017, they were right there on this box. 2017, which is around Q1 2007, around right here. The stock price have gone up like this. This is the beauty of insider trading. And when you have big money to support the stock price, the guy cannot fall down because Warren Buffett and BlackRock got much more to lose than anyone out there. So this basically is how we go about reverse engineering all the big trades. That 1,000% more, that 2,000% more, that $10 billion more, $5 billion more. The moment you spot such a trade, you know someone will be out there to protect the stock price. All right? So I want to give you a very, very exciting introduction into the world of the who, which is Spiking Wisdom number 2. We are only at number 2. There are 6 questions we need to tackle. And once we are on Spiking Wisdom number 2, I'll open up the floor for question. Do you have any questions about who? Let us tackle the questions before we move on to the next question. And here we go. So let me tweet out the question right now. Do you have any questions about who? All right? So go and look at your mobile phone on the Twitter. You have 1 minute to pose this question to me. I look forward to engaging your question. Please post your question at the Twitter. And for those of you who are posting into the Zoom chat, let me tell you, I'm not reading the Zoom chat. You have to post on the Twitter, all right? That's the only place that I answer questions in our 2 days class. So please do that right now.
I see something, it's coming up on the horizon. Oh, let me clear my head
Okay, we got questions coming in. Let me tackle the questions first. And then all of you got a chance to really engage with me. So let's start with the first question from Beatrice. How to stay on top of who? When is the perfect time to search for who? Is there any sweet time of year where the who's who make large move? Okay, so, and I'm very glad all of you start to think about questions like this because you'll tie in later on when we connect all the 6 questions together to present to you our master strategy. All right? And then you will discover why our strategy is the most beautiful of them all, the most powerful on the planet. Now, the question of to stay on top of who is not driven by the person or the investor. We are always driven by the flow of the money. I don't care whether it's a sovereign wealth fund, or the top 100, or the pension funds, or the retirement funds, or the universe of funds. I don't care about all whatever names they are. All I care about is who is willing to put down a big bet. Because for someone to show hand and increase his bet by 1,000%, 2,000%, that guy better know what he's doing. Please wave your hands if you understand this. Yes? Or else that guy will not dare to do a big punt. That means he already knew something is about to happen, but he will not tell you. So, in a way, it's treading a little bit on, that guy probably has some insider information, but he will not tell you. Just like if you look at the traits of Warren Buffett and BlackRock, I suspect both of them have lunch. Larry Fink, who is the CEO of BlackRock, and Warren Buffett, they probably have lunch together and say, hey, maybe it's time we buy Apple together. And that's it. How could it be so coincidental? Same quarter, both put in show hand. But it's very difficult to catch them. It's very difficult to catch them for colluding or conspiracy. You cannot catch them based on that merit. That's the beauty of tracking the numbers, all right? So this question itself will tie into our overall strategy when we present to you in a short while. Are the who's the ones who are always on the news? No, not true. The who are the ones that always put the money. By the way, there are many people on the news. They like talk got heaven, got earth, got dragon or phoenix, but they have not coughed out a single cent. Those are what we call the scammers, the bullshitters. Talk all day long about many big things, but they have not put in a single dollar on the bet. Those people waste our time. Please wave your hands if you understand this, yes? So I really don't like to engage those people who talk all day long about concept strategies, tactics, but they have not invested a single dime. Waste of time. There are enough theories in the world. What we need is the practitioners who really put in the money after they've done their due diligence, all right? Next one for Mark. Does it mean we always have to look at the data to identify the who? Now you understand the pain. You don't have to look at the data all the time. The way we build it is we will alert you. But without our robot, you're going to go through a lot of pain. That's exactly the whole journey I've gone through myself. In the past, I used to do the manual hard work. It is very painful, I can tell you. Spreadsheets and lots of spreadsheets. And today, with cloud computing and artificial intelligence, we have reduced the time very significantly, all right? Next is just follow the Tauke, Taiko, the lead investor. Yes, in a certain way, it's right. The lead investors will always take the lead, and that's why it's important to know who are the big players in the marketplace. You start off by mastering the 100 of them, all right? How often the insiders will have to declare their investment? All right, good question. So according to the law was actually enacted because of this guy called Warren Buffett. You see, he's been around like close to 100 years already. And back then when he was trading, every time he has to inform the marketplace, the stock price will go crazy. And he go to the politicians and say, hey, you guys got to do something about this because my trades are causing a lot of volatility in the marketplace. And in fact, because of Warren Buffett, they enacted a new law called the 45-day window law. That is, Every single money manager on earth that has asset under management above $100 million or above, they have to declare their filing, whatever they buy or sell. But because of Warren Buffett, they allow a 45-day window period. Let me explain to you this concept. This concept goes like this, all right? So take, for example, right now we are in Q1. Q1 equals to Jan plus Feb plus March. All right? But what they do is this. In the quarter one, whatever they are buying and selling, they could be buying in the first week of January, third week of February, fourth day of March. Doesn't matter when they buy, all right? But whatever they do in quarter one, they have to tell the whole world 45 days after the last day of March. So if you look at your calendar right now, go and very quickly look on the calendar right now. The last day of March is 31st, all right? So 31st of March, they will add a 45 days equals to April is 30 days, May is 15 days, so around 15th of May. All right, to be exact, let me give you the real date. That's 16th of May, we'll be doing our trade through the night. All right, that means on the 16th of May, all of them, they must inform the marketplace. Whatever they buy and sell in quarter one. Now, most of the traders, they follow Warren Buffett. The dirty little trick that he does is, he will wait until the last day, which is the 16th of May, in the last hour, in the last minute, and then he informs the market. He plays this dirty trick. So many of them follow Warren Buffett to do that. Now, some of them will announce, like, after they buy, they'll announce the next day. But very few of them do that. Right now, majority of the really big traders on Wall Street, they follow Warren Buffett. They wait until the last day. All right? So this is called a 45 days period. But does it really matter that they announce 45 days later? No, it doesn't matter. Because the information is fair. That means on the day of 16th of May, then the whole world will get to know what Warren Buffett traded on Q1. It is a very fair game. All right? So typically, we will trade. We have an event called Trade Through the Night when the data is fully complete. This is the day where we'll do 20 trades per night. Trade Through the Night event. This is called the Trade Through the Night event. All right? This is our flagship event. I mean, if you guys have never traded through the night before, that means we start 1 hour before the opening bell, which is 8:30 p.m. Malaysia time, and we trade until 4 a.m. Malaysia time. We really trade through the night, and in that one night, we deploy 20 companies. We deploy 100% of the capital. All right? So that's how we go about doing that. So don't worry about this. We'll prepare you for that journey. Okay, so I answered the question by Chong. Daniel, this is quarterly report. With this report lagging, how to get fresh report news. You can't get any earlier. This is the best data you can ever get already. All right? So anything you get before that, you can't get it because they intentionally don't want you to know. They will squeeze until the last day. All right? Dr. Yo is what? Should we follow our nation's top company? We always follow the top money, not the top company. We always follow the top money. So during the 2 days, I want to make sure you all are all in sync with the thinking of insider trading. We follow top money, all right? Next is Kelvin. So means we have to look at the stock that the most insider they invest. But how? Oh, you're asking great question. But how? So this is where we will teach you about our unique strategy and methodology to tie everything in together. Then you appreciate how beautiful the strategy is, all right? So we'll be unveiling that tonight. Edmund, how do we know who to follow? Again, we only follow hot money. I'll show you in a short while. And one last chance, I refreshed. If not, we are done on second question, the question of who. All right, let me just scroll down. And good, we are done on the who. All right, so I'm going to push through to the third question, and depends on how fast this cohort you guys can learn from me. The earlier we complete it, the earlier we can start live trading, and that is the part that you really learn. All right, so just do a quick check back. Everybody look in front of the camera. Are all of you fine so far? Just wave your hands. Are you okay with the pace? All right. If you're not following up any point in time, don't worry, don't be shy. Just ask on the Twitter, and I'll go in and address it. All right. I feel that this is the way that you can really learn really fast. Rather than I throw you a lot of jargons, terminologies, no point doing that. You just learn on the spot. It's much more effective. Question number 3, Spiking Wisdom Hacks 3. What caused a stock price to spike? So we dealt with the how first. How is the benchmark? How to make 5 to 100% profit return in one day? Then followed by who. Who are really the guys making money? Then followed by what caused a spike. Now, what caused a spike? This is a very big topic. I'm going to show you recently what happened in the marketplace. The first one we're going to look at is, let's look at this company, Western Alliance Bank Corporation, ticker symbol WAL. I'm going to show you how to go there first. So just go to our very popular search box right at the top, and you just type in WAL. And this is hot on the news, you know, for this entire week. Once you type in, the company that we're going to inspect is this guy, Western Alliance Bank Corp. All right, hot on the news, really hot. And make sure you are following closely together with us, or else you'll be kind of left behind. All right, here we go. I click on Western Bank Corp, and let me give you the shortcut. All right, so I think it's trying to load. Hang on a minute, it's loaded up already. Now once it's loaded up, go to this place where you can see view Yahoo chart. I wait for you. Please go to this place and click view Yahoo chart. All right, I wait for you, huh? And here we go. After you click view Yahoo chart, you open up a stock chart like this. Now we're going to configure our stock chart together. One time effort, you need to get it right. So first thing, go to the top right hand corner, click on settings. I wait for you. Click on settings. All right. Now make sure you have exactly like mine, 4 blue ticks. 4 ticks. Please do that right now, because if yours is not like this, you're going to see a different chart. Okay? So that's something you have to do on your own desktop, not on your phone, not on your iPad, on your desktop. Be very disciplined about this, all right? Don't play around with this. You have to get it right one. Now, after you've done that, the next place that you need to go to is here. Make sure you selected candle. We don't want to look at anything else but candle, all right? Make sure you select candle. Chop, done. Next, you go to this place and select 1 year. 1Y equals to 1 year. All right. Once you selected 1 year, make sure the interval is 1 day. Okay? So if you've done this, exactly what I told you to do, you will see exactly like mine. This is the recent phenomena where Silicon Valley Bank, Signature Bank, and Silvergate Bank, 3 of them went bankrupt. And all the banking stocks got affected overnight. And once you see this, I want to show you what is happening behind the scenes. All right? So if you are looking at this, please give a thumbs up in front of your camera so that we can see that you are really following with us. All right, those never give thumbs up means you are very stressed right now. Okay, watch. Do not get distracted right now. Moment in time. Go and click on 5-day. Click on 5-day right now. 5-day. Because I'm going to show you what caused a spike. All right. Click on 5-day. And here we go. I'm going to use this as an example. You see how I play with the charts, all right? Now, this is like showing you what happens after the market closes, all right? For example, I think I show you this range easier. Okay, look, start from here. So when the market opens, it opens from 9 a.m. to 9:30 a.m. Eastern Time to 4 p.m. Eastern Standard Time. All right? So I'm going to type right here, opens. Okay? Which is a white background. But the moment the market closes, which is this range right here, the market closes, which is 4 p.m. Eastern Time to the next day 9:30 a.m. Eastern Standard Time. You are able to see after the market closes, the stock price continue to move down because of some bad news. All right? So this is the natural phenomena. What happens behind the scenes. And on this particular date is 13th of March. Very easy to remember. 13 is an unlucky number. And if I click back to the 1-year chart, on the 13th of March, it's shown as this candle. You can see that? It's very different behind the scenes, right? So how do you handle something like this? Then this is where I need to teach you about the concept of spikes. Here we go. Now that I got your interest, we're going to go back to our software. We're going to click on the spiking. Click on it right now. All right? And the first guy that spiked up 15%, right here. This is before the opening bell, 15%. We're going to click on it. The company is called UiPath. And then go and click on the Yahoo chart. All right, go and click on the Yahoo chart. Oops. Hang on a minute. Hang on a minute. What happened? I click on. Okay, why don't you just type path at the search box? You arrive at UiPath. All right. Just click on path on the search box and you arrive at UiPath. Wait for it to load. And here we go. Load up already. And then you open up the Yahoo chart, all right? So I can also go back to here. Top right hand corner, type in path. P-A-T-H. All right? And click on 1 year. Always have the habit to click 1 year first. And first thing you see right up here, pre-market spike up 15%. Look at the top left-hand corner, pre-market spike up 15%. Now I'm going to show you graphically on the graph how it looks like when it spike up 15%. So go and click on the 5-day. Click on 5-day. 5D. And this is exactly what happened. Yesterday, during the market open, when it was trading it between 9 a.m. to 4 p.m., 9:30 a.m. to 4 p.m. Eastern Time, it was trading around this range at a stop price, average price of $14. All right? Now, after the bell closes, they announce a good news. Straight away, spike up. So imagine you go in at $14 and let's say 25 cents. And today you can get out at $17. So you just take a simple calculation. Profit. Hang on a minute. There's another new addition to our students. This guy just decided to jump into our class. Let me introduce to you, this trader is called Tabby. Tabby the trader. He trades with me every night, and he can see all of you. That's why he got very curious. He'll jump on my table just to look at all of you, all right? So this is a new addition to our student. Okay, you can sit down here. Stay cool, stay cool. So the profit equals to, let's say you sell at $17 minus 14.25. All right? And then you divide it by 14.25. The cost. All right? So what is the profit? So let me take out my calculator. 17 minus 14.25, the profit is 2.75 divided by 14.25. You have just made for yourself 19% profit return in one day. So that's 19% profit in one day. There you go. That's how you calculate. All right, so all of you, please do that right now. Write down on your notes. This is what caused a spike. A spike is, later at the opening bell, you see the big candle jump up, and there's no empty land between them. It's a big, big spike, all right? So every day there are such opportunities in the marketplace. Our job is to go and find them. So if you play this guy, you know, of course, up there is saying you are making about, the spike is about 15.3%, but if you follow my trading, buy low 14.25, sell high 17, you will make 19% profit return in just one day. So that is what we are talking about, all right? So there are many, many such examples out there. So I go back to right over here. These are all the big spikes. You can even see yesterday which are the big spikes yesterday. There's another one like 12 point OTLY. Let's go to look at OTLY. OTLY. Okay, that one spike up already. Maybe I find another one. OTLY. Maybe it's a SMAR. SMAR. Yep, this is one example of a spike. So you can see, if you enter the red candle, the next day it spike up to the green candle. There's there's empty space between them one. That's called a spike. All right. So many, many such examples. So what caused a stock price to spike? Now I show you the phenomena of the spike. But the real question we have to really solve tonight is spiking wisdom number 3. What caused a stock price to spike? So I'm going to show you where we put out this information. Go back to our software. I'm waiting for all of you. Take your time. Start from the hamburger menu. All right. So once you click on the hamburger menu, you'll see like many tools gathered for you, right? And I think my engineers put it somewhere. I can't find it right now. Don't know where they put it. Spike. Where did they put it? Spiking up. No, not spiking up. Hang on a minute. Let me go and find that place. Where are all the spikes? Okay. So they will reply me in a short while. Just hang on a minute. I think they put it under. I think they changed the layout somewhere here. Let me just go and find it. Okay, let them reply me. I think they changed the layout recently. All right. So come back to here. Spiking up. First of all, you can play with this one first, called spiking up and down. All right. So go to here, spiking up and down. Let me show you where is it. It's found right here. Spiking up and down. Start from the hamburger menu. You find spiking up and down. And then we put down all the reasons for the spikes right here. So you have like earnings, index addition, analysts, different reasons, right? Like stock buyback, CFO, dividend. So we put down all the reasons that you can ever cause a stock price to spike. FDA, public offering, the majority of it you'll see that is related to earnings announcement, all right? Now we kind of tabulated there's about 88 different spikes, like discovery of oil, discovery of diamond, resignation of a CEO, appointment of a new CFO, 88 different reasons. But later on, we'll tackle this question, what caused a stock price to spike, by formulating a strategy, all right? And the strategy goes right here. Here we go. Please focus in front of the camera right now. Look at my slides. 3, 2, 1. And I need you to take a picture of this right now. The reason for a spike is found in these 3 words up there. First, we start with cozy. Second one, we start with war. And the third one, we'll end off with fiat. All right? So this part, I need to instruct you on the teaching itself. Let us start off with cozy. Now, what exactly is cozy? Now, most of you met me, during the road trip to Malaysia, and I spell out to you very clearly. There are only 3 instruments that we are really interested in. C for cryptos, O for options, S for stocks, and Y we say yes. All right. So where is this found? Let me show you right now. Right here. Where we call it, the wealth is defined as cozy. All right. COSY. So if you have not written this down previously, can you all please do that right now? Now, you are going to struggle on this concept as well. And let me explain to you why. Because some of you start asking questions like, teacher, why is property not in your wealth? Why is commodity not in your wealth? Why not gold? Why not Forex? Why not some of the exotic instruments or the wealth products that my bankers have introduced to me? Why are they not found in your wealth? All right? How many of you have encountered this question before? Just wave your hands. You're struggling with other instruments, right? And before you go to the dark side, I need you all to reconcile this ideological difference. And it's really not difficult. Because the instrument that we are looking for boils down to one very important word. And I need you to write down this word. It must answer the question of liquidity. Because if an instrument is not liquid enough, you are really not wealthy enough. I say again, if an instrument is not liquid enough, you are really not wealthy enough. How many of you heard of friends who own like top-notch prime properties, real estate? And as the price goes down, they became poor overnight. Wave your hands. Because they cannot sell off an illiquid instrument and generate cash. So the real question is your instrument liquid enough? Can you buy right now and sell the next day without any delay in time? Because I'm looking for such an instrument to fulfill my criteria of wealth, that you can cash out anytime. So straight away, when I set out a criteria like liquidity, it means that many instruments will be killed already, especially slow-moving instruments. The second criteria is this. These instruments that we're looking at, can we study it? Is it simple enough for us to study it? Is there enough data around it? So take, for example, one of the biggest challenge that you're going to have is, how many of you heard of Forex? Wave your hands, Forex. Right? You're talking about US dollar and the ringgit, US dollar, Japanese yen, US dollar, Aussie, US pound, British pound, US Sing, and all that. Now, Forex basically means you're studying the whole country. Holy moly! US dollar, you have to study the whole country of the United States. Ringgit, you study the whole country of Malaysia. Sing dollar, you study the whole country of Singapore. Now, between studying a country versus a single company, which one is easier? A country or a company? Which one should I twist it right? Right? You got to find something that's easier to study. If it involves a whole country, it's too complex. You're not going to get sufficient data just to understand how to trade on it. All right? So, number one, question of liquidity. Number two, the question of getting the data to study it. Are there sufficient data to back your study? If not, you can't trade on it. And that is the reason why you will rarely feel, I mean, when we talk about like all these instruments that created the millionaires of the world, you don't see an instrument like Forex. There are many millionaires behind Forex. Because there's Forex traded by big traders, not by the small guys. All right? You don't see like gold is right here and many people become millionaires just trading on gold. No. I'm looking at very basic instruments where ordinary men can achieve their extraordinary wealth. These are the three. All right? Now, right now, I'm also working on the last category, which is the Gen Z. My children belong to this generation. I believe it will be something related to Bitcoin. Not Bitcoin, but something related to Bitcoin. Could be a Bitcoin-derived NFT, could be a Bitcoin-derived DeFi, could be a Bitcoin-derived something that's deriving its value from Bitcoin. And that instrument will appear in the year 2032. All right? It will not appear right now. Now it's too early, too nascent already. So that's the reason why we go back. Holy moly. We go back to the question of who, sorry, not who, the question of what. So we finished the first part on cozy. And this is something you all have to reconcile within yourself, or else you will struggle. Can it fulfill the question of liquidity? Can it fulfill the question of data, that we can study enough of it to make an informed decision? All right? Then the second keyword is war, W-A-R. Please write down the concept of war, W-A-R. Now, what exactly is a war? A war goes this way. First, while W equals to, you must have a wow event. Without the wow event, the stock price cannot move. Second, A stands for, you must have announcement. That means you must have a date. If there's no date, we cannot predict when it will happen, then we are wasting time again. And the third thing is R. Now, what exactly is R? R stands for, it must be recurring or repeatable. Because if it's not recurring, you can only make money one time and that's it, game over. You can't make money out of it anymore. So as a result, we say that we need to fulfill the concept of war right here, W-A-R. That is the beauty of war. So I'm teaching you how to formulate the strategy, and many of the students taught by me move on to develop very, very sophisticated strategies based on this foundation. I encourage you to do likewise, but my mission is go out there to equip as many individuals as possible to start trading and investing. So I make it really simple for all of you, all right? So once we understand this, wow, there's a wow event. A, there's an announcement date. R, there's a recurring, it's happening every now and then. With this knowledge in mind, then and only then, I can present to you the last word, and that is called fiat. F-I-A-T. Okay? Now, fiat means money, but we'll show you the exact know-how of what exactly F-I-A-T stands for. Here we go. I'm going to switch back right now, and I'm going to show you where we operationalize the data. So we left off over here just now. So step one, can all of you please go with me? Hamburger menu on the top left. Always start from there. Then step two, look under Stocks AI. And just click on any one of them. Usually I'll click on Daily Bread. Just click on Daily Bread. Ding. And I present to you the concept of cozy, war, and fiat, all found on this platform right here in front of you. All found right now. All right? So I think all of you are getting in at the same time is killing the server. I told my engineers about it already. So here we go. Okay? So what you see is right up here, very important. We have reconciled the concept of COSY, C-O-S-Y, cryptos, options, and stocks. That's why I'm teaching you stocks right now. The second word is war, W-A-R. What are the kind of events or news or catalysts that will cause the stock price to spike? Look up here. The first one is Daily Bread. This is a concept based on earnings. Time frame, 1 day. Get in today, get out tomorrow. 1 day, make a 5 to 100% profit return in 1 day. The second one is resurrection. This is based on what? FDA approval. Approvals of food and drug. Usually you are working on pharmaceutical drugs. And for drugs, they go through phase 1, phase 2, phase 3 clinical trial. All right? And every time they go through this clinical trial, we got like 4 or 5 different times to make money out of the same drug discovery. So we really love to make money and save lives at the same time. Time frame, 1 month. Third one is triangulation. Now, triangulation is really, really important. We are triangulating 3 data points. Number 1, did the top 100 investors bought into it? Number two, among the universe of all investors, did they also believe in it? And number three, did this stock fulfill the current seasonality of the market? Now, the market will keep changing season. For example, we went through the season of semiconductor chip at this moment because of the growth of ChatGPT. How many of you heard of ChatGPT? ChatGPT overnight, boom, bring up the profile of semiconductor chips. Without the A100 and the H100 chips from NVIDIA, you cannot have ChatGPT, all right? And then, with the looming war that's going to happen that's happening in Russia, Ukraine, that might happen in Taiwan, that may happen in Iran, whatever, there's also a sectoral movement into defense stocks, military equipment. Every country right now have increased their defense budget because of the threat of China, because of the threat of whatever unseen and foreseen enemies. So those are what we call the seasonality at the current moment, all right? So triangulation plays that important role. The third one, time frame of 1 year, is called GOAT, greatest of all time. Meaning to say, these are the stocks that will survive over at least a 1 year period. That means they are very strong stocks, and typically we flow along with the current president's agenda. So what is the current president agenda? He is working on a clean energy bill. He's working on the defense spending. He's working on anything that can support the banks, prevent the banks from collapsing. So those are the government's agenda at this moment, all right? So there's many things to teach you, but the platform itself gives you the basic foundation. You know where to look at, all right? So we go back right now and ask ourselves, okay, we have cozy, war, and fiat, and did we fulfill the question of what caused the stock price to spike? Yes, we know these are the reasons that cause the stock price to spike. But then, the fourth question is where to find the spikes. So please write that down right now. You are given 1 minute. Okay, so we've gone through the where, and this is where we recap. We go through the daily bread, 1 day, resurrection, 1 month, triangulation, 1 quarter, and of course, you know, there's another big one right here, GOAT, 1 year period, greatest of all time. Now, these are your 4 foundational time frame. Very, very important. Don't worry, it's all found on the platform. You don't have to like memorize or anything like that. It's all found on the platform right up here. In fact, there's a total of 8 time frames, all right? So I don't want to overwhelm you guys yet. We always start off with daily bread, 1 day, 1 month resurrection, 1 quarter triangulation, 1 year GOAT. Now, 1 election means 4-year cycle. We focus on stock buyback. 1 decade means 10-year period. We focus on trillion-dollar market cap stocks. 1 lifetime, we only focus on 1 crypto called Bitcoin. And 3 generations, this is your end game. How do you become financially free and you don't have to work the rest of your life, and you set off not just yourself, but 3 generations, yourself, your children, and your grandchildren. This is your end goal, all right? So let's see how much we can cover over the 2 days. There's a lot of things for me to share. But first thing first, we are 30 minutes before the opening bell, and I covered 4 questions already. The question of how to make 5 to 100% profit return in 1 day. who are the most successful money managers out there, what caused the stock price to spike, and where to find the spikes, all right? When we come back from the first break, we're going to go through a live demonstration. We're going to trade immediately. But what is important right now is this. From the starting of the class until this moment in time, I know I've been moving between different screens. Now, some of you are not tech savvy. You feel very uncomfortable. You feel very stressed. Let me tell you, that's very normal because you're just trying to find where to click. But you just have to remember one thing. Step 1, always go to the top left-hand corner, click on the hamburger menu. Minimally, you must know this. Step 2, you open up the left column. That's where you can select those data that I want you to find them. All right? Then step 3, how to reverse engineer when did Warren Buffett buy Apple and how over time he increased his bets on Apple. Your homework for the break is to reverse engineer when did Warren Buffett buy into Apple stock and over time how he keep increasing his bets until today. All right? So do that during the break time. And when we come back, we'll start the analysis. I want to show you what happens before the opening bell, right at the opening bell, and after the opening bell. All right? So time check. Right now it's 8:55. We'll start the class around 9:25. Between 9:20 to 9:25. The moment you hear my music, please make sure you come back on, turn your camera on, and I'll see you at between 9:20 to 9:25. I see you back then. All right? See you later on.